Dirty dealings, corporate battles, consumer woes. This is Evening 5. The Armed Forces Fund Board has announced the immediate resignation of its Chief Executive Officer, Dato' Ahmad Nazim Abdul Rahman. In a statement, LTAT Chairman Tan Sri Raja Mohammed Afandi conveyed appreciation for Ahmad Nazim's exceptional dedication and contributions for LTAT and its group of companies during his tenure. He said the group applaud his efforts in ensuring that LTAT and its stakeholders' interests, particularly contributors, are not only safeguarded but will also continue to grow. Mohammed Afandi added that while the group begins its search for a new CEO, it will remain focused on executing its strategic priorities and delivering value. Ahmad Nazim expressed his gratitude for the opportunity to lead the LTAT. He says that he is incredibly proud of what the team has accomplished and is confident that the organization is well positioned for continued success in the future. Ahmad Nazim was appointed to the position on June 15, 2021. According to LTAT, under his leadership, the organization has achieved significant milestones, including the launch of the LTAT Strategic Plan 2023-2025. Prior to joining LTAT, Ahmad Nazim was Southeast Asia head of Abu Dhabi-based asset manager Allied Investment Partners. The Malaysian stock market remains orderly after a severe sell-down of 16 stocks triggered by their shareholders' inability to meet margin calls, according to Bursa Malaysia CEO Datuk Muhammad Umar Swift. He comments that the counters involved represent some 0.18% of the total market, adding that while the operator does see the changes and while they are concerned, he is quick to add that it doesn't impose a systemic threat. Muhammad Umar says there will always be what we would like to call animal spirits in the market. That is what makes the market triumph. The key is to make sure the market is orderly, that there is no misconduct. Bursa Malaysia reported a 21.5% year-on-year growth in net profit for the fourth quarter of FY 2023, driven by trading revenue from the securities market amid higher average daily trading value. Net profit rose from 49 million to 59.55 million ringgit. The group declared a final dividend of 14 sen. Quarterly revenue grew 7.5% year-on-year to 156.68 million ringgit. Although ADV for FY 2023 for securities markets on-market trades grew by a meager 0.5% to 2.1 billion, Bursa Malaysia's net profit last year increased 11.4% to 252.4 million thanks to lower operating expenses. Full-year revenue grew 2.2% year-on-year to 616.5 million compared with the 603.3 million posted last year. For FY 2023, Bursa Malaysia said it had achieved all announced headline key performance indicators except for the number of initial public offerings. The market operator had targeted 39 IPOs for FY 2023 but recorded 32 first-time share sales exercises instead, which it attributed to fewer IPOs on the lead market. Commenting on its prospects, Bursa Malaysia said trading activities in the securities market will continue to be influenced by the ongoing global and local developments such as the monetary policy shifts in advanced economies, weaker than expected economic activity in China, the performance of the ringgit, as well as corporate earnings. Bursa expects its revenue and profitability to improve in 2024, setting KPI for PBT of 293 to 323 million and non-trading revenue growth of 5 to 7%. The group also targeted 42 IPOs with a total IPO market capitalization of 13 billion ringgit. Bursa Malaysia said it is targeting to launch 2 new products, namely the renewable energy certificates and the centralized sustainability intelligence platform. MSM Malaysia Holdings has lifted the garden leave for its Chief Financial Officer Mazzatul Aini Shah Abdul Malik Shah effective from February 1st. In a boss filing, the sugar refiner said she would resume her duties as CFO. Mazzatul Aini's garden leave was initially set from October 20th to December 15th, 2023. At that time, MSM stated that it was to facilitate an ongoing internal investigation. The leave was first prolonged to January 15, 2024 and further extended to February 15th, 2024 or until the board provides further notice. However, the latest filing did not elaborate on the reason for lifting the garden leave earlier or provide information on the outcome of the internal investigation. Mazzatul Aini was appointed as MSM CFO on December 1st, 2022. Before this appointment, she served as an independent non-executive director at 7-Eleven Malaysia Holdings and TH Heavy Engineering, acting as an audit committee member. Home Minister Datuk Sri Saifuddin Nasution Ismail said the government is extending the freeze on new applications for foreign workers. This was as the existing approved quota, coupled with foreign workers to be legalised under a recalibration program that ended last year, would be enough to fulfil the local demand for foreign labour, he said at a press conference. The tenure of the extension of the quota freeze will be announced later. The workforce recalibration program saw 518,000 foreign workers registered in its second round through 2023 and 418,649 workers in WRP 1.0 from November 2020 to December 2022 based on government data. Employers, meanwhile, have been given 3 months until end March to complete the legalization process of their foreign employees under the program. Based on the 12th Malaysia Plan, the number of required foreign workers in Malaysia is set at 2.4 million by 2025. A balanced quota of 400,000 foreign workers has yet to be filled. Meanwhile, Saifuddin said the Cabinet has also agreed for a one-stop centre for foreign labour application to be formed as an agency under the Home Ministry. He explained that once the quota application is reopened, the one-stop centre will be able to accelerate the application process from 29 months and 13 days to just 15 months and 7 days. Saifuddin added that the Cabinet has also agreed for Malaysia to initiate talks with foreign labour source countries to review memoranda of understanding signed with said countries. Of the 15 labour source countries, 3 countries are prioritised for discussions, namely Indonesia, Nepal and Bangladesh, which collectively provide 77% of Malaysia's foreign labour supply, according to Saifuddin. Construction services firm GDB Holdings has clinched a 306 million project to develop a private hospital at Bukit Jalil, Kuala Lumpur. GDB's wholly owned unit, Grand Dynamic Builders, was appointed by KL International Hospital as the main contractor for the project. KLIH is a subsidiary of KL Wellness City. In a statement on Wednesday, GDB said the project includes execution, performance, design, construction, completion, commissioning of machinery and equipment, and maintenance of the private hospital building. The construction of the hospital will be carried out over a period of 25 months, commencing on March 16th. The hospital will serve as the centerpiece of KL Wellness City, poised to be a world-class hub for both domestic and international healthcare and medical services, featuring centers of excellence across areas including cardiology, spine health, neurohealth, sports medicine, cosmetic surgery and fertility. GDB Group MD Chia Hiam Chia says the contract marks a significant milestone as it embarks on constructing a state-of-the-art hospital and at the same time elevating its track record. With this win, GDB said its current order book increased to 475 million versus 169 million as at end September 2023. The group intends to fund the project with internally generated funds or bank borrowings.